From the morning reading, stocks end lower with energy stocks leading numerous bull flags. 3 of 9 sectors moved higher on Wednesday. XLU, XLI, and XLB were the strongest sectors, while XLE was the weakest sector. Breadth weakened as the decliners led advancers 1.32 to 1 on the New York Stock Exchange and 1.8 to 1 on the NASDAQ. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:05 a.m. Central Time, and I'm recording this in preparation for the market day of November the 12th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive on into the morning report. And pretty much no action last night. All 4 broad market indices for the U.S. at the time of this cut were essentially scratch. Crude oil's down about 0.6%. Euro is up about 0.1, so just above scratch. And the bonds and gold are also right at scratch. So very, very little action in U.S. futures markets last night. China is down about 0.5%. Hong Kong going the other way, up 2.4%. Japan about scratch. In Europe, both Germany and the United Kingdom are down about 0.5%. In terms of macroeconomic reports for today, we do pick up the pace after really a pretty slow action the beginning of this week. We do have the weekly unemployment claims. You have the JOLTS job openings. FOMC member Evans is speaking. You have crude oil inventory on Thursday of this week instead of its usual place on Wednesday because of the holiday. And then also FOMC member Dudley is speaking. If you're a bond trader, take note that the 30-year bond is in auction today. In terms of tomorrow, for the U.S., you have core retail sales, PPI, business inventories, natural gas, and the preliminary University of Michigan inflation expectations. And here's a red flag report, University of Michigan consumer sentiment. So pretty good slate of macroeconomic reports for both Thursday and Friday. So after some pretty slow action the first 3 days of this week, we're likely to heat up in the next 2. In terms of current volatility, we have short-term VIX at a 15.6, so that did pop a little bit yesterday. Skew still remains elevated at a 132. IV percentile still remain very, very low, with the S&P at a 10, the Russell at a 20, the NASDAQ at a 15, and the Dow at a 20. You see there were no standard deviation moves put in by any of the broad markets yesterday, and indeed we've started to get relatively thin in terms of volatility. We had quite a pop there for a while, and that's all now aged off. It's been over 2 weeks since we've had significant volatility. Even the Russell has calmed down by a pretty significant amount, and this is running at about half of the number of days with more than a 1 standard deviation move that you would expect. In terms of charts, let's take a quick look at the charts. The SPX had a relatively directionless day yesterday. It was bearish, and this is something of a bearish engulfing, though its placement isn't particularly exciting. We make a lot more out of a bearish engulfing up here after a big run than we do, after some consolidation. Mostly you got to put Tuesday and Wednesday down as just simply inside kind of action, not really all that direction oriented. Let's see here. The Russell, pretty much the same situation. I think we'll probably find this on all 4 today, given that bonds weren't open and all that kind of stuff yesterday that we talked about yesterday morning. And then finally the Dow. I wouldn't make too much of any of these. They are all technically bearish engulfing candles. So you could have some negative bias going into today, but I think you're probably going to find that the macroeconomic reports for today and having all the bond and other market participants come back into play will be much more meaningful than this particular set of candlesticks at this location at this time. VIX futures a little bit elevated yesterday, and then starting into today, this is actually today's candle. Nothing yet to get terribly excited about. So that's what we have there from the charts. In terms of the daily report, we still remain in that phase 3 bull flag expectation. Look for shallow pullbacks to corrections compared to the bull legs. That's kind of the expectation until we get something to tell us differently. An overall portfolio investor posture, IBD status remains now for, I believe, with today is tied with the prior longest run of days, trading days, with a confirmed uptrend from IBD for 2015. So we've had some staying power for the bulls this time. What remains to be seen is, can we actually accomplish anything? Now that this time put us from the bottom of the move, the retracement of those August lows, back up towards the upper level of the prior range, and we've not yet accomplished any kind of new highs or anything. While on a relative basis, we certainly have moved a lot of points, some 250 points. And if you had bought right in at that bottom and you were to exit right now, that is a gain. But in terms of where you are in the year to date and really the big picture on people who hold through the dips and so forth, you really haven't accomplished anything yet, and we're still waiting for the S&P to set into new highs. Accumulation distribution score for the S&P is a B. NASDAQ is a C+. GMI index improved one notch to a 6 out of 6. So perfect there. Buy signal since 1019, though that author still remains in cash. Primary market condition remains in a neutral bear. Decision point scoreboards remains the same, with the short to intermediate term in good shape and the long term starting to improve and starting to pop with some long term bullish signals, but most are still in a bearish cast. And that's in alignment with our primary market condition being a neutral bear. So overall consensus remains short to medium term bullish, longer term with some bearish indications, and that puts us in a transitional phase, and it remains to be seen as to whether the short to intermediate push the long term into becoming bullish and we set up new highs, or is this some sort of complex topping pattern and we roll over and start out to to validate that long-term bearish stance. In terms of intermediate term market posture, that is very bullish in its posture with an upslope sentiment, and you see all four are still very bullish, though they've started to fall a little bit from their very lofty numbers. There were all four of them up over 95, and you see that it's starting to fall back. In terms of position sizing opinions, those both remain on both systems at 100%. Hedge warning status remains 0+, normal with some elevated risk aspects. And you can see we did have some risk aspects come back into play. We had both the market in decline and the sharp increase warning flag with yesterday's action. I'll make more of this if we see this again after today, after all the market participants come back. So kind of keep that in mind as a caveat. Nothing else really to get too excited about. We did have more new lows than highs, but was not of a warning status. Now, this is a change here on the key intermarket risk aversion indicators. We did have two roll over and cross to the risk off position. So that has started to increase the warning level for our current condition. In terms of special opinions, still remaining with the same 3 opinions as of yesterday. VIX is inside the acceptable window. Certainly is acceptable to do option income strategies. In terms of cover calls and put selling, we're cautiously bullish on both of these. For the cover calls, consider 1-to-1 ratios of out of the money and in the money strikes, as well as 1-to-1 ratios of higher beta and lower beta. On aggressive setups, still remain a little bit defensive. Consider using out of the money put sell and consider scaling into the position that you are willing to own. In terms of put selling, also perhaps a bit defensive. Consider defined risk positions. Use spreads instead of just naked puts when possible. And then also position size in the scale that you're willing to own. Remember, we are not a healthy bull at this time, and you should be setting up your trades with that in view. In terms of the market posture by the sector specific, obviously the last couple days have done some damage, though financials and industrials are still holding up. And on the flip side, energy, utilities, and retail. Retail took another hit yesterday, and this sector continues to be very much in trouble. In terms of the percent change yesterday, you see utilities, telecommunications, industrials, and materials all were positive. Utilities the most so, and that's really kind of 2 back-to-back days where the utilities have put in something of note, though still needing to kind of recover from the thrashing that sector took last Friday. So that should be enough for today. As always, if you find that what you're getting here is helpful to your trading, we greatly appreciate your subscribing to us on the YouTube channel, liking us on YouTube, tweet us to your Twitter followers, your StockTwit followers. Obviously, all those things are acknowledgement of the work that we're doing here. Note that each time we see that come through. If you have direct comments, send that to support@falconglobaltraders.com. We have a number of opportunities available, and I think perhaps today I'll mention this one right here. Obviously, we put all these concepts into practice, and if you'd like to see how we actually model our trades from entry to exit, you can see that in our live trade chat room. So more information is available at this website, so take a look at that, and I think you'll find that is a fantastic value. Other opportunities. Disclaimers as always. Hit the pause button if you have a need for more time to review the disclaimers. And we'll see you back here tomorrow morning before the market opens with the Falcon Global Market Preview. Good trading.